traders at Axis Bank expect activities in Nigeria's bond market to be moderate as investors continue to trade cautiously. However, they say they expect the central bank to debit discretionary cash reserve requirements to manage liquidity. Adamma Mbachu, team lead for currency trading at Axis Bank, tells us more about this. Adamma, thank you for taking the time out to join us. Let's just start with, let's go back into the week, looking at starting with the money market. Talk to us about liquidity levels and the money market rates that we've seen this week.
Thank you, Esther, for having me. Okay, on the money market space, the system liquidity opened positive with about 200 billion, and we saw the OBB and overnight rate decline slightly by 50 basis points to trade around 12.5% and 13% levels. We also saw activities around the special automobile maturity by the CBN, and we also saw an OMO auction being conducted by the CBN as well. So actually, this caused a bit of drop in the system liquidity to about 127 billion, owing mainly to the OMO sale of about 18.3 billion, and then as such, we saw the OBB and overnight slightly elevated at 14% and 14.25%.
But let's move over to the fixed income markets. For the bond market, talk to us about movements that we've seen on the yield curve this week, investors' appetite, and of course, it's a new month, and how portfolio managers, if there was any change in activity or reassignment in the portfolio. Talking to equity analysts this week, they've told me that there's been this persistent exit of equity investors into the bonds market, of course, looking for higher yields.
Yeah, that is very correct. We saw activities in the bond space especially, and it was mainly the buying sentiment. And this was actually due to the revised calendar issued by the DMO as they reopened, they opened up the 2050 maturity and reopened about 2027 and 2035 maturity. And they intend to issue about 150 to 180 billion of that maturity. So this actually caused a bit of buying interest across those tenors. However, we may see a bit of decline as we expect the auction coming up again this month. So where we may see a bit of selling interest and also an increase in yield.
Now, we've witnessed this market sometime last year when the CBN moved aggressively to bring down interest rates. Of course, we saw that change in the OMO market exclusion of a certain class of investors just to bring down the debt service levels for the fiscal authorities. Now we're seeing these rates climbing back at the fixed income market, currently at around 13% levels. You can correct me if I'm wrong.
Yeah,
but I'm just wondering how sustainable this is. Is this are we going to see the rates climb further, or could we see the CBN coming back? Because looking at the debt stock and the debt service levels of the federal government right now is actually still on the high side. Yeah,
in terms of rate levels of the fixed income space, we'll try to tie it a bit to what is happening on the foreign exchange market. We may see a bit of drop in the rate levels in the fixed income space, given the increased activities on the buying side of the quotes. However, we also see that the foreign exchange market is going through a lot of pressure as the CBN is trying to do a lot of reforms in that space to ensure that we attract enough of foreign portfolio investors and flows into the market. As such, I see improved yields on the fixed income space to bring in some of these investors to create a bit of respite in the foreign exchange market. Currently, the FX rate on the I&E window has been trading around the 411 levels, and then we have seen that despite the interventions by the CBN in the market space, we continue to see positive funds in the I&E fund. So I think there's a lot of activities the CBN and the DMO are going to do to ensure that we bring a lot of flows in.
Adamma, thank you for talking to us today, bringing us up to speed on trading so far this week at the fixed income and FX market. Adamma Mbachu, team lead for currency trading at Axis Bank.